Great. Thanks, everyone. Welcome to our discussion forum based on our Delta Think News and Views series. For the regulars, welcome back. Those of you who've attended our discussion webinars before, we're happy to see you again. For those who are new, we're thrilled to have you join us today for a lively discussion. I'm going to start off with some introductions. I'm Lori Carlin, Senior Consultant and Chief Commercial Officer at Delta Think, and with me today are my colleagues and News and Views authors, Dan Pollock, our Chief Digital Officer at Delta Think, and along with Ann Michael, an architect of the Delta Think Data and Analytics tool, and Heather Staines, our Senior Consultant here at Delta Think and Director of Community Engagement for the Data and Analytics tool. If you've joined us for a News and Views forum before, then you know we've designed these to be very interactive with lots of questions and participation from you all. So I hope you're ready with questions and to participate in our discussion. A few logistical items before we begin. When you have a question, please use the Q&A box. And that's where we will be retrieving our questions from for Heather and Dan. In terms of structure, we'll have some opening remarks and then we'll move into questions. I've got some questions for Heather and Dan, but then I will be looking to the attendees to fill in after that. I think we're ready to get started now. So thank you again for joining us, and I'll hand off to Heather.
They can get off mute. Thanks so much, Lori. It's always great to be able to get together with with everyone to have a discussion. Couldn't be more excited. I just wanted to kick off with a little bit about our methods in case there are folks here who are not really that familiar with this annual project that we do. Which Dan goes deep cover for a couple months to work on. We're grateful, as we noted in the News and Views, to the organizations that participate in our annual survey. Just as a reminder, we anonymize and aggregate all the information that comes in through those survey participants to inform our estimates. And for those folks who participated in that, we'll be getting their detailed market update and analysis out shortly. Our market estimates really focus on research publications for which money is likely to be paid, either to read or to publish. And then we look at the underlying trends to inform strategic decision making. While it is an update on the entire market size, we do, as a part of this October update, hone in on open access, and the definitions here are important. What we're talking about in the News and Views and what we'll be talking about today excludes bronze or public access, that content that doesn't have a permissive reuse license, as well as green, because we're looking at things that have either a fee associated to publish or a cost associated on the reading side. Every year we get better and better at this process, and so as part of our process we go back and look at restating figures from prior year. So with that note on methodology, I'm going to hand over to Dan to kick us off with this year's headlights.
Thanks, Heather. Hello, everyone. Thanks for joining us. So yes, our headline findings. I think the headline is we're getting a bit of a mixed message about open access growth. So we estimate that 2022's open access market grew by just slightly over 24% from the previous year, from 2021. And that now means that in 2022, we estimate the open access scholarly journals market to be worth a shade over $2 billion worldwide. It's a pretty big number. So the mixed message comes from the fact that on the one hand, that's a great amount of growth. I really wish my pension was growing at 24% a year. However, if you compare that 24% with growth with what we've seen in previous years, it's significantly lower. It's about 2/3. That open access market segment grew about 2/3 of what it did the year before, 2020 to 21. So mixed message, strong growth, but nonetheless slowing growth for the open access segment of the market. We need to estimate the overall scholarly journals market as well, so we can put these figures in context. And we estimate the total scholarly journals market to have increased by about 0.4% in 2022 compared with the year before. And just to put that 0.4% in context, we think that kind of long-term average growth of the scholarly journals market is between 2 and 4%. It tends to wiggle around a bit, but it's of that order of magnitude. So clearly a much lower growth in the overall market, perhaps than normal. And then just thinking about that a little bit, if you can remember back to this time last year and the year before, we have previously seen some pretty spectacular growth in 2020 and in 2021. We've seen very, very good growth in the wake of COVID-19. I think if you remember, COVID-19 meant people couldn't get into their labs, so they worked through their backlog of research, and that benefited the scholarly publishing industry. We saw a sort of leap in submissions and output. So, of course, following that above long-term average growth, you would expect a correction. You'd expect the pendulum, if you will, to swing back. And we were very much anticipating that would happen in 2022 and through this year, 2023. And so our headlines are suggesting that that has indeed happened, but only to a degree. So we've seen that softening of the journals market growth. And then, as I said, we've seen reduced growth in the open access market, but it's still pretty strong. A couple of other numbers for you to put all this in context. We estimated that by the end of 2022, around 49%, a shade over 49% of scholarly articles were published as paid for open access. As Heather said, that's both free to read and free to reuse. So just over 49% of output was open access, but that accounted for just under 20% of the revenue. So there's a disparity between volume, share of output and share of revenue in the open access segment. And then finally, to give you a sense of midterm growth, we estimate that the 2022 to 2025 CAGR, so that's compound annualized growth rate, or basically average growth rate. So the 2022 to 2025 CAGR, we estimate that will be 13% in open access output and the same amount in open access market value. So there are the headlines. Hope you've all been taking notes.
Great. Thank you, Dan. Before I have a question regarding some of the points that you made just now, but we have a question from the group that's more on the methodology side. So let's take care of that. And it's really about, in estimating the monetary value of the OA market, how are we accounting for waivers and discounts and things of that nature when we look at the OA market?
They're included. So we're trying to estimate what's the total money we think has changed hands. So that will include waivers, discounts, other moving parts.
Great.
I hope that answers the question.
So then 24% growth is a good number. As you said, we all hope that our pension or retirement funds were going up that much. But can you explain a bit more about the mixed message and talk more, expand on that a bit?
Yeah, absolutely. So we've seen this strong growth, as you said, in the open access segment, and then the pretty well flatlining growth in the market overall, and growth is slowing. So kind of what's going on. I mentioned we think the primary, if you like, sort of feature of this is this pendulum swinging back. So we had these above average growth in the post-COVID wake. Things are correcting back to long-term averages. However, there's one other big thing that really did come out of the numbers, and that's the effects of currencies and exchange rates. And we think that has had an influence on things. So just to briefly explain what's going on, as we all know, scholarly publishing is a global endeavor, and that means many publishers, and many of the very large publishers, operate in non-US dollar exchange rates. We need to state the market in one currency, so we go for US dollars, as is commonplace. So we have to convert the non-US chunks to US dollars. And what we found is that non-US currencies in 2022 really did weaken compared with the US dollar. So when you convert them to US dollars, you kind of get less US dollars. So if we exclude those currency effects, if we basically say, let's run the numbers with the 2021 currency exchange rates, apply those to our 2022 estimates, so you're then removing any of these changes, we do find some changes in the numbers. So that overall market, if you exclude currency effects, would have grown at just over 3.5%. Include currency effects, and it's growing at 0.4%. So clearly that kind of exchange rate alone would seem to explain the difference between our flatlining headlines and a return to underlying market trends for the overall journals market. And then if I look at the open access segment, if we exclude currency effects, it adds about another 5 percentage points of growth. So that 24% goes up to about 29%. Still less than the previous year, but nonetheless, again, you can see currency effects are clearly kind of moving the needle quite a bit. So we think that's kind of an important part of the overall mix.
Yeah. Heather,
Yeah.
anything to add there?
Yeah, I mean, when we've been working on this, obviously quite extensively over the past couple of weeks, it was very, very striking. I mean, speaking just for myself, when I hear about currency mentioned, I usually feel like it's put forward a little bit as an excuse for something, bad, lower earnings, weaker sales, et cetera. But what we see in 2022 isn't just for, one player. Of course, these are across the board impacts, and it does make a significant difference, looking at that. And, it's something we're going to keep our eye on closely for next as well.
I think, Heather, that's a really good point, because I mean, you're absolutely right. It's without currency effects, all of a sudden our numbers look better. But I think you do need both, because without currency effects, you're seeing essentially what's going on. It's a bit like the concept of EBITDA, earnings before incomes, tax, and etc. If you want to look at core business activities, you want to try and remove these, if you like, external factors that have nothing to do with how well an organization is operating. But equally, if you've ever been on holiday and exchanged your US dollars into euros or vice versa or whatever, you know that shift in currency can really have an effect on how much money is flowing in to the bank account or how much you can buy. So I think you kind of need both. I think you need the exclusive to get a sense of what's going on the underlying operations, but then you need the inclusive to understand, if you like, the cash flow and the money flow. So it's a bit of both, and Heather, you're absolutely right. I mean, this year was striking. It was quite profound, probably more so than we have seen in an average year.
Yep.
In addition to the currency, are there other things that you're seeing as contributing to the mix of what's going on?
I'll take a first shot at this and sort of explain the numbers, and then interested in Heather's thoughts on that. So we've given you the overall open access stuff. As you know, however, that's split into fully open and hybrid. If you want to pull apart the details on that's what we offer as part of our tool. But just to give you a sort of overall sense of what's going on, we've noticed that growth in hybrid output and revenue is roughly twice that of fully open. It's not quite that simple, but just to give you a rough headline. So hybrid is growing much quicker than fully open output and revenue, although hybrid accounts for the minority share of all of open access. So clearly, I think hybrid is contributing significantly to overall open access growth, and it seems that hybrid's had a pretty good 2 or 3 years. And I think it's, if you look, we were punching slightly above its weight, would maybe the way to look at it.
Sorry, I thought my dog was going to bark there for a second. I was hovering over the mute button. Sorry about that. Yeah, it's really striking. I'm, from the folks that I'm, regularly in touch with, and the folks that Lori and I are working on projects with, this isn't come as too much of a surprise. It's a fairly straightforward option to enable hybrid in some instances across an entire portfolio, but launching a new fully OA journal takes a lot of time. You got to put together your editorial board, you got to get a healthy pipeline of submissions, and all of this before you've got an impact factor. the gold route is definitely the pure gold is a longer play and takes time. And we've seen, many fully OA journal launches. So now the strategy becomes a little bit more complex, crafting a transfer policy to keep, your whole family of OA journals together, so you can keep as many articles as you can within the family there. That's longer, and more complicated. So it definitely, aligns with what we're hearing and seeing.
And I think that complexity is an important point, Heather, because you're absolutely right. The hybrid's a quick on-ramp. Then, of course, we also know that certain funders and advocates of open access really want to go down the fully open access, the quote gold journal route. Coalition S being the obvious example there. So I suspect we'll find these factors will start to shift and move around in importance as time goes on. But I absolutely agree with Heather. I mean, these only time will tell. These trends will take time to play out, and the various transitions that they speak to will take time to manifest.
Yeah, Heather, there's also a pricing angle here, do you think?
Yeah, I mean, looking, again, at, what I'm hearing, what we're seeing, and when we're working with clients, we know from our regular March APC update that we put together that the APCs for the hybrid journals tend to be more costly on average than the fully OA APCs. And we have some hybrid APCs, some of the, it's the Cell and Nature and Science, they're very, very high. I don't think that's enough to fully explain, what is happening here, with the corresponding revenue, but it is something, to keep an eye on. But one of I think the interesting things to dig into a little bit more is really, what's happening behaviorally in terms of publications. Most of the transformative agreement deals, up until recently, have excluded fully open access journals. And perhaps this is pushing researchers, particularly, folks like historians and English professors and, humanists like myself, to publish more, where they didn't have the opportunity to do that. And maybe that's more in hybrid journals. So I'm definitely keeping an eye on that. I am hearing that these newer deals are starting to pull in the fully OA journals. And the fully open access publishers are expanding their agreements with societies and institutions, offering, I think Frontiers recently did like a flat fee offering. So it's going to be important to note, how this mix might shift and change in the near future.
Yeah, absolutely. In terms of looking at the APC charges, we do report in March on the APCs. Are in terms of increases or monitoring increases, are those increases contributing to the CARGR? And if so, are we seeing publishers being more aggressive with their increases for APCs, less aggressive? Do we have any information or data on that?
I could kick off if you want. So one of the things that I think has been most interesting in the kind of 3 years that I've been, with Delta Think is when we superimpose the changes over time in the APCs, and I call it the publisher money ball. And it used to be that there was a big peak at the most popular APC price and then a drop off, a really sharp drop off. And now, we really see more journals being bumped up a little bit, at the upper end. And also, there is a little bit of, more journals towards the lower end of APCs also increasing. So the publishers are getting really, really sophisticated in how they're pricing it. And when we look at the total number of journals, if you go back to the March news and views that are in that highest peak, it's a smaller number. So we do think that, we're seeing hybrid journals, convert to gold, and then they're carrying with them slightly, APC that goes along with that sort of transformation, if you pardon the verbiage.
Yeah, we have another anything to add to that, Dan? I have
no, that's it's rather the sort of aggressive headline price increases. It's nudging up more stuff. and sort of optimizing revenue gains. In terms of APC contribution to growth, I think it's a bit of a multiplier effect. So it's sort of more stuff for which more money is being transacted. If you can sell more stuff at a slightly higher price, of course, you make more money. And I think in particular, because hybrid APCs tend to be that much greater than fully open APCs, then a growth in hybrid multiplied by the higher APC can have that kind of multiplier effect and nudge the overall numbers up. So I think it's a multiplier effect of the number of things helping to drive that growth.
Yeah. Dan, I think this audience question, I think you can start off with. Are we tracking Diamond and or subscribe to Open take up?
Sort of, yes. So is the short answer. The lengthy one is those are included in our estimates as best we can. So when we send out our annual survey to publishers, we basically say to them, how much stuff have you produced? How much money have you brought in? And can you then split that down amongst some major buckets, open access, fully open, hybrid, and everything else? And then that's as Heather said at the start, we anonymize and aggregate that up, and that's the basis of our models. The interesting thing is you then get into a little bit of nuance and detail, because, for example, if you're a publisher who has sold something as a subscribe to open journal, let's say, how do you categorize it? And the short answer is that might vary depending on the publisher. So a publisher might say, well, it's clearly open access. We sold it subscribe to open, therefore we will take that money and put it in the open access bucket. There you go, Delta Think, have a number. Or they might categorize it under subscriptions, because that reflects the operations and the sales force and how things have come in. So when we try and split out these revenues, we do ask people, please, if it's open access, put it in the open access bucket, but we do acknowledge that different publishers may categorize things differently, and that might reflect on their operations and so on. So we do our best, but of course, we have a complicated industry and things can be a bit of a gray area, especially when you have these mixed model read and publish and read deals. So hence my sort of, yes, we do try and track these things, allocate them as best we can, but the usual disclaimers apply. What we don't necessarily do is sort of track individual deals. That the idea of this exercise is to estimate the overall landscape and the overall trends in it. And then finally, things like Diamond journals, back to what Heather was saying right at the start about the methodology, we're trying to look at the area of the market where money changes hands between a buyer and a seller. The thing about a lot of Diamond is that it can overlap so-called community journals that might be run by, I don't know, a faculty member and an assistant or something like that inside a university. Those lie outside our market estimates because they're not the sort of things for which any transactions are likely to take place. The publishing and the reading is provided free of charge. However, for a Diamond journal where there might be a transactional sponsorship from, let's say, a foundation paying a publisher, then hopefully that will be inside our market numbers. So a bit of a detailed answer. I hope that covers off all the basis on that.
Yeah, I mean, we get a lot of questions about it, and there's a lot of attention on it. This as a model. But it's important to remember that as a percentage, it's a small number of publishers and a small number of journals that are pursuing this right now. The publishers who are kind of all in on their portfolio tend to be on the smaller side, and then we do have some larger publishers who have identified a portion of their offering that they want to try this on, but balance that against publishers who may be putting out in one fell swoop thousands in a transformative agreement. And it's definitely worth keeping an eye on. It's interesting, and so much more emphasis is on it now from an equity standpoint, that we will be looking at it more and more closely. But in terms of attention, it punches above its weight. It's very, very interesting. But when we're looking at the numbers here, as Dan said, it's small still.
Great. Dan, you noted in the News and Views, the published News and Views, that changes in allocation of revenue by publishers could result in upward shifts in revenue without big changes in output. Can you talk a little bit more about that?
Yeah, so that's back to my subscribe to open example and how do publishers categorize their revenue. If you imagine we are someone say, look, how much open access have you made? And they in the not open access bucket, let's suppose they put some subscribe to open deals for whatever reason, and then 2 or 3 years from now, they might revisit how they choose to run their accounts and classifications. Say, actually, we now are going to put those same revenues in the open access bucket. Well, what you'll see is nothing's actually changed other than we've sort of labeled revenue instead of one thing, we've labeled it another. And in that particular example, you would therefore see an apparent growth in open access revenue, not because sort of more open access stuff is published, but because that revenue has been recategorized. So that's, again, one of the things we wrestle with. We try and control it out, and we try and phrase the surveys in a way that makes it clear. But again, this is a market in transition. Different people have different ways of accounting things, especially when it comes to mixed model deals. Is it always possible to separate everything you get when you're actually selling everything for one low price? So we just have to nod our head. We have to sort of at least acknowledge, I think, that there's a limit to our methodology, and it may well be we see some sort of apparent boost of open access growth simply as a result of that method and a result of definition and classification. And I have to say, I've been an analyst on and off over the years for probably too long now, and I've yet to meet any analyst who won't end up having a conversation about definitions. What do we exclude or include? How do we define the scholarly journals market? Does it include databases and abstract and indexing products or not? Does it include books or not? You can carry on discussing definitions till the cows come home, and of course those will have fairly profound effects on your numbers.
Yeah, definitely. Question from the attendees. So at the STM conference in Frankfurt last week, Chinese Academy of Sciences presented information about the proportioned link between APCs, journal impact factor, category rankings, and higher impact factor can justify increases relative to equivalent journals. Are we making any kind of link between those APC and impact factor? And I know we go into some analysis of that within the tool, but what can you tell us about that, Dan?
So yes, we've studied this, and that we revisit it every year as part of our APC roundup. The short answer is, again, it's a mixed model. The theme of this thing is really that I think mixed messages. So on the whole, there seems to be very, very weak, if any, link between a measure of impact, citation measure, and APCs being asked by a publisher. So you might find quite high APCs for relatively low impact journals and vice versa. However, if you split things out a bit, separate hybrid from fully open, you find hybrid really tends to be very little link at all. But fully open journals show some sort of a pattern. So for fully open journals, there seems to be a bit of evidence of the higher the impact, the higher the APC that a publisher might ask. Various confounding factors apply, but you tend to see that, I think, more those links where they do exist tend to be more obvious, I think, amongst major publishers for the fully open. For hybrid, it seems that people tend to charge, but I would imagine a sort of equivalent that they might get from a subscription article. So you tend to find that hybrid APCs are pretty well follow just a line, no matter where your impact is, they just charge X, whereas I said the fully open journals follow a bit more of a link. So mixed model there, and that again continues to evolve over time. One other thing probably worth noting, there are some outliers to that. So Heather mentioned right near the start, we know there's some outlying very high APCs from the very high impact journals. So the Cells, the Natures, so on, and other high impact journals are available. Those do tend to, I think, to pitch their APCs much higher to reflect their prestige status, if you will.
Yeah, just a couple points that I would add. I mean, we do have publishers who use one APC price across all of their journals. And so they're not, at least, the at this point, divvying them up or shifting them individually. If they do a price increase, they're doing it kind of as a block. So it's publisher, behavior is something to consider here. Dan pointed out, those outlier, those big, 10,000 plus APCs. And, we got a lot of questions about, what does that mean? And, transparency around APCs projects like Coalition S put forward, have tried to kind of dig into, what costs are apportioned by publishers and, what an APC should cost, which gets back into definitions. As Dan noted, no two publishers are the same. But, I think when it comes to the pricing that was set for those very, very high cost journals, many of them didn't even have official APC options when they started offering that, but they could get that to publish if someone had a funder requirement to publish. And so that's what they charged. And that has kind of put a pin out there. But, it doesn't necessarily mean it kind of translates back beyond that initial sort of offering in the market, I think.
And that behavior, the publisher behavior and also researcher behavior. So I think at the ALPS conference recently, I was chairing a panel and the question about input factors came up. One of the bits of background to that, I believe there was Emerald Publishing run a survey looking at what part of what it looks at is what influences researchers' decisions where to publish. And apparently the journal impact factor is right up there. Getting published in a high impact factor journal remains something that as a researcher you're looking for. And I believe the most recent Emerald survey showed almost an increase towards that behavior compared with a previous version of it. So it seems that researchers might be looking at that, but whether that desire then translates into their shopping around based on price, I don't think there's any evidence. And whether publishers are looking at that and using it to set price, again, as Heather said, we often find publishers that will simply charge one price, because that, on the other side, it makes it a lot easier the fewer price points you have. And if publishers have a whole spread of APCs, of course, the danger is, the perception is then they're somehow making things overcomplicated or gaming the market, etc. So I think that it's quite a subtle decision to make, that kind of pricing, and we see quite a complex set of drivers behind the marketplace, especially as the decision maker and the person writing the check are often two different groups of stakeholders.
Going back to the subscribe to Open and Diamond conversation, do we see any impact on the slowing of APCs from the Diamond part of the market? Do we think that that's impacting overall?
Not sure I understand the question, because Diamond by definition doesn't have APCs.
Right.
Yeah.
In terms of output versus
short answer is I don't know. And I think it's a really good question. So something we might take a note to look into is, could we overlay where we can identify obviously Diamond journals, overlay that with our patterns and output and see what we see. So I think that could form the basis of an interesting future piece of analysis.
Yeah. So going back overall of the market sizing, it's always a discussion about share of volume and share of value. So how do you think this will play out? Do you have any thoughts about that? If half of the content is OA, but only 20% of the money is coming from OA?
So I'll kick off with the dynamics and then I bring Heather in. So absolutely, we think this is a very important dynamic. If you think about it, if you're extracting less value than volume, as a thought experiment, if half of output is only worth 20% of the market, run your thought experiment. What if 100% of output was open access? Well, then by that numbers, it would mean you'd only be getting about 40% of current market value. Please don't quote me on that. That's a thought experiment, but it shows the dynamic. So clearly, I think it would be important, if we are to maintain the value of the market, that yield, if you will, that value of open access needs to catch up its market share. Some of this may be down to all of this categorization stuff we've talked about previously, so that it may be happening anyway. It's just not appearing in the right buckets. But certainly, I think that, and I would say we are seeing that gap slowly narrowing. So value continues to grow quicker than share, perhaps not as fast as we might need it to. So it's certainly a key dynamic to keep an eye on, and the trends seem to be heading slowly, if you will, in the right direction for maintaining value. As to what you can then do about it, what publishers can do about it, my short and trite answer is, well, there's only two ways to get more money in. You either produce more stuff or charge more for it. So put your prices up or do more. I don't know, Heather, if you've got any slightly more insightful views on what's going on in that dynamic than me.
Yeah, we had a session at Frankfurt last week that was sponsored by the Charleston conference, where we did a panel on, kind of sustainability. And I mean, the whole diversification of revenue, the buy versus build, we certainly see acquisitions, continuing. We've seen for a long time publishers buying hosting platforms, suppliers buying hosting platforms, submission systems and the like, startups getting acquired. The recent, ACS acquisition of Kronos Hub, giving, them a play in the APC processing space, other startups that are getting in, additional author services, whether it's language services, whether it's checking services, things like that are being offered, partnerships to try to improve on economies of scale, but also in the humanities side, the Brill, De Gruyter coming together, I think is a really, interesting development, particularly for books. So I don't think we're at the end of this, kind of musical chairs type acquisition and offerings strategy. So keeps us on our toes.
I think actually, Heather, that's a profound point. I've always said this about our market. It's a very slow moving marketplace. And I like to draw the comparison with the recording industry. Having once been an aspirant musician, it's kind of naturally drawn to it. But if you look at what happened in the record industry, when Napster appeared, within 18 months, the revenues of the industry were in free fall. I mean, it was worth, I don't know, 40% of its peak value a few years later. And that was a result of the effects of digital transformation and people going online and then consuming music in a very different way. Now, our industry, I think, has got a more interesting and nuanced story. We're arguably one of the earliest industries to go online, but I think it's fairly safe to say we didn't really go fully digital. We simply took print and made it electronic. So we were taking print artifacts and largely print-driven processes, putting them online, and big deal, et cetera, happened through the late 90s, early noughties. What I think we're now seeing play out is a real kind of digital transformation, because if you think about open access, that is only possible in a digital world where your cost of distribution is marginally near zero. And as Heather said, we're seeing now a lot of rearrangements as people are revisiting which bits of the production process they own, and inboard and outboard and all this stuff. So I think we're slowly now seeing this transformation happening. And that's all going to be part of a realignment of revenues, because I think very few industries that predated the internet revolution, if you will, are going to come through it and come out unscathed and making just as much money as they were before, without at least some period of transition. And I think we're going through our transition, albeit in slow motion. Perhaps a contentious issue, I don't know, but so I think we're inevitably going to see dips and troughs in revenue and some disruption as that all of those transformations start to really take effect.
Absolutely. So time to take out your crystal balls and look to the future. So any predictions for next year? Are we looking at a long-term trend or a short-term blip? Where do we think the market may be heading in the future?
You can go first on that one, Heather.
Yeah.
Thanks, Dan. We've mentioned, I think Coalition S has come up a couple times, OSTP, last year at this time, I don't think it's an understatement to say we were still all freaking out over it. So there are, a lot of general drivers that continue. Someone Martin had asked a question about books. So, this is something that I think a lot. And just to divert the question, one of my colleagues in grad school called it like mental judo. She's like, ask the question you want to answer the question you want to answer, not the question that was asked. But I mean, I love to dig into books, and we do have a section in the tool about books. We do news and views about books, and it's something that increasingly we're doing a lot of projects at Delta Think around books, but they're such a different animal, when it comes to OA, because I was a book acquisitions editor, and it's a different list every year. You do have authors that sometimes come back more frequently than that, but they're coming back hopefully with a different book. We're seeing a lot of interest in books mapping to curriculum. There's a lot of schools now have zero textbook cost initiatives, or transparency in textbook costs. So that's something that publishers are paying close attention to, and OA books may be a nice fit in the ref. With a kind of a slight, kind of delay, because there wasn't necessarily preparation for it, but we're seeing books in the UK being required to be open. There are references in the Nelson memo, to books. So I think that is something we're going to continue to watch closely. And if we think there's a lot of models in journals, there's even more models in books. So that's something, that's continuing to settle. So to your question, Lori, is what we're seeing now a short-term blip or a long-term trend? I'm going to say both because it's complicated. Set up a call, and I'm happy to detail that further.
Dan.
Yeah, so I think we're seeing things come back towards the long-term trend in the wake of COVID. I always use the analogy of the classic saloon bar door. If you think about your archetypal Western, when somebody strolls through those swing doors on the saloon, and they go bada 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 bada. And I think we're probably seeing that in the wake of COVID. In terms of kind of longer term outlook, as Heather said, the drivers of an increasingly open access world remain in place. They'd started before COVID. I think they're going to transcend it. COVID, we reflected on this last year, COVID effectively added rocket boosters, I think, to digital transformation, both in terms of things going open access, but more generally. I mean, I think many industries said that an effect of COVID was to accelerate and move to more digital ways of working. So that trend we expect will continue. We mention our survey. We do ask participants to give an indication of where they think things are going in the year to come. On the whole, they've responded with a positive sentiment. And if you can also go to any of the publicly listed companies, of course, they in their investor relations areas of their websites will publish their outlook. So on the whole, we think people are giving a positive outlook. I do know some people are less positive about where open access might be going in the current year, the next year. But I think in the round, we're going to see open access growth continue to fall towards a sort of longer term trend of kind of low double-digit growth. I think that seems to be where the long-term trends are heading. And then the overall scholarly market, as I think I said before, seems to be that sort of 2 to 4% range. And we think those things will continue. And then finally, there are other opportunities. Heather mentioned books. We also touched on moving up the value chain or down the value chain, so different workflow products. I think that could start to come into the mix. And then what's going to happen with data and services around data, and how publishers might start to move out of sort of pure document paradigms and in using some of their peer review capabilities and judgment quality filtering capabilities to perhaps help researchers in a broader sense and in other aspects of their researcher workflow. I think that's something to look out for in the kind of mid to long term.
Can I just jump in just back for a second? Because Dan, you mentioned that the outlook being, relatively positive. I mean, I think we should bear in mind there's so many different types of publishers by geography,
Yeah.
by size, by discipline. And, you know, I'm sure there's folks on this call that are thinking like, you know, wow, I'm happy that they're positive, but we're not seeing that
Yeah.
here. And I'm thinking in particular, have lots of conversations with society publishers who use their publication revenue to support a lot of professional development, you know, activities, you know, for their the professionals, for their members. And you know, I think that it's taken them a little bit longer, you know, to kind of get their brains around, you know, what's been happening, partly because there's a lack of clarity still in what some of these initiatives mean, but also they have the eternal question of, you know, should they do some type of partnership? You know, that's always kind of hanging, you know, in their minds. And so I think we should not kind of just kind of gloss over, you know, that kind of difference in sentiment that is definitely out there. So
yeah, and we often talk about this, don't we, on these calls and in our pieces, that your mileage may vary. It's the old William Gibson quote, "The future's here, but it's just not evenly distributed." So I think there will definitely be people that I think are looking at a challenging 2023, 2024, maybe more, others that are not. Some all or none of the above kind of thing.
And there are definitely smaller, medium-sized societies, university presses that are, you know, still moving forward with a subscription model or looking for other things that they can monetize around the journal, so that they can continue to bring in revenue to support their communities.
And it's something we actually offer in the guts of our tool. You can break out society and university presses and see whether things are tracking differently for that group compared with sort of quote other publishers. And we have done some work, and maybe we can look into putting some pieces out, trying to break into that a little bit more, and see if we can tease out any patterns. Because I think, Laurie, you know, you're absolutely right. It really does depend on who you are as a publisher, as an organization.
And even by discipline as well. I mean, there's lots of factors that go into it. So as you said, your mileage may vary for sure. All right. I think we are done for today. So thank you so much, Dan and Heather, and everyone who attended today, and absolutely our survey participants for helping us to bring all this information together. This was a great session. We'll be sharing a recorded version of this on our website in a few days, and those of you who are signed up will receive a notification when that's available, in case you want to listen again or share with your colleagues. And certainly, if anything more occurs to you, if you have any other questions, please reach out to us. We're happy to have a discussion or talk with you about things that are on your mind. We always like to engage and hear from the community. So watch for word of the discussion. Our next discussion forum, probably in early 2024. We'll have another webinar of this sort, and Heather and I will be in Charleston in little less than 2 weeks. So if anyone will be in Charleston, please, we'd love to see you there in person, in real life. And thank you so much, everyone, for joining us today.
Thank you.